All right, so thanks to our opening panel for kicking off the event today. So joining me here on stage, we have John Meyer, partner and mining analyst at SP Angel. Next, we have Jan-Henk von Konijnenburg, head of global prospect evaluation at BHP Exploration. We have Sunny Shah, investment team leader at Resource Capital Funds. And we have Patrick Chidley, partner at 3PPM. So thanks everyone for joining me today. Kick things off. So let's talk about kind of the global macro environment and kind of, the impact of everything that's happening right now on exploration and project financing. So, what are some of the implications on the junior sector? How is it impacting where investment is going? So maybe, John, you're closest to me. Do you want to kick it off?
Yeah, okay. I'll try and keep it short because we could talk about this for days.
We've got plenty of time.
Look, it's been a tough environment for the mining sector. As interest rates rose in the United States and elsewhere around the world, money has been sucked out of the riskier sectors and into safer areas. Now, I don't agree with it because there is still a degree of inflation going on in the world, although it's good to see those numbers coming down last night in the US. And certainly a good element of control elsewhere in the world. It's taken a little while for inflation to come down, but that's okay. And of course, we've got a couple of wars going on, which we never really like to talk about, but it has impacted, again, how people view the world, the risks they want to take, and what they want to do with their money. So it wasn't so bad with the Russia-Ukraine war. People saw that as relatively well contained, certainly until recently. But when things kicked off between Israel and Gaza, very unfortunately, that again had another impact because people who tend to invest from that end of the world are clearly taking a more cautious view. Now, I think hopefully that's about to come to an end. I'm not taking sides here. I'm just saying we don't like war at all of any sort. Although the concept of throwing metals at each other isn't so bad for the sector. Hopefully this period of de-risking is soon to pass, and we certainly see some green shoots.
Anyone else want to jump in?
Well, I think one of the sort of impacts we've had from the changes in the global macro has been the increase in the gold price, which has come through, which is definitely feeding through into the earnings and cash flow of the major gold producers. And I think as we go through the year, I think that trend will continue, and we'll see more money going into the gold sector, and hopefully down into the juniors as well as we move through. And the higher gold price environment begins to entrench itself, as opposed to look like something that's just going to get washed away because, for example, real rates are going to be high. And I think that's been one of the sort of reasons why gold's gone up, is that the real rate environment isn't really as large or as high as the market's been expecting.
Yeah, look, the only other thing I would add, consistent with the themes others have talked about, is just overall cost of capital has gone up. Cost of capital was always high for the mining sector. It's just got even higher, and so that means incentive prices need to be that much more supportive for new project developments, for them to make economic returns, and that's that will drive investment into some projects and unfortunately not into others as a result.
So, John brought up an interesting point about kind of the risks and, how you kind of manage that. So I wanted to go a little bit deeper into that. As investors and kind of players in this space, how do you manage, geopolitical risk? What do you see as some of the biggest kind of risks, but then also opportunities? So, how do you kind of turn that around into different opportunities for this sector?
From our side, I think geopolitics is in some ways creating more opportunities. I mean, we're definitely seeing, a drive towards more local supply chains. And I think that's particularly the case for the midstream side and the processing side. I mean, you can't change where upstream, resources are and mines are. The best quality mines are where they are. But I think you're seeing a lot more impetus and capital in the midstream part of the cycle in, Western economies and Europe creating opportunities. I mean, the risks on the other side is really around skill sets. I mean, China has been so dominant in all of these markets for the best part of a decade, and replicating that will not be easy. And managing that is going to be critical to successfully achieving some of these supply chains outside of China.
Yeah, I guess for a company like ours, it's certainly something we take into account when we look for new opportunities. Geopolitical risk is one of the metrics we judge new investments on, and with a world that is changing, we're becoming more uncertain. We have to really think through how we're going to mitigate those risks. It doesn't mean that any jurisdictions are necessarily off the table, but we do have to come up with a very clear justification as to why.
And do you use like metrics for that, or is it kind of a?
No, we have some clear metrics that we need to look at. They encompass all the normal ones, right? I mean, security is top of mind. Also, supply chains, as Sunny mentioned, really important. There's a number of metrics we judge these investments against.
So, we're all kind of investors in this space. So, I thought it'd be interesting to look at, where are you currently focused your attention? What's kind of the big drivers for your investments at the currently, and where do you think others in the space, should be focused at this time?
I think, as Cindy says, you've got to follow the assets to some degree. But again, you do have to be very mindful of the countries you walk into. And as we know, not every mining company likes to go into South Africa. We kind of agree with that because for one reason or another, they eat management time, and you can understand the reticence of boards really not wanting to be there because they've got a lot of other things to focus on. So if we think of what countries that we really like, other parts of Southern Africa are really good. Zambia is particularly popular because it has a combination of good quality exploration and assets, particularly in the copper mining area. If you go to Botswana and Namibia, they're very popular. You go up into countries like Malawi, that doesn't look so bad. Even the Congo is manageable, although you need the right people to manage all that. Then you go across into Latin America, Chile, Peru. They have their challenges, but they're okay. And then if you're lucky enough to find things in more developed countries like Australia, Canada, even the UK, may I suggest it? I think these things are possible these days. I think although the environmental aspects are very important, there are workable frameworks now, and that's good. And okay, there's native title issues in many areas, but you have to deal with this one way or another wherever you are. The nice thing about Africa is generally the governments are fairly pragmatic, I've always found, and that means you can actually do business there.
Yeah. No, I would agree with that analysis. At BHP, we're really focused. We're really driven by our long-term commodity outlooks, which are focused on the energy transition, copper, nickel, as well as on a growing world population, looking at how we're going to feed them, and that drives our investment in potash. Our primary focus at the moment is copper. That's really top of the line from an exploration perspective, and we're really looking at all the different belts in the world. However, taking into account what we were talking about before in terms of geopolitical risk, security, and ESG metrics. So.
Yeah, I think there's a definitely a pull from some of the sort of nations that don't have very secure supplies for minerals, in terms of reinvesting or beginning to invest, even in some cases, in countries like the UK, and so there's money actually coming in to support those sort of projects. I think Cornish lithium would be a good example. and other countries in areas like in the EU, for example, not very much mining activity, a brand new legislation to attract more secure supplies of critical metals, and I think that should actually stimulate exploration in nations that haven't really been explored. Strange thing is there's Western nations that haven't been explored very well at all. I mean, you don't need to necessarily go to South America and Africa, even though they have very strong mineral belts there, which are prospective. There's lots of countries, like Finland, for example, a country I know well, is very prospective geologically, and I think there's a lot of low-hanging fruit to be had there. What we need to do, though, is one of the problems, and we'll talk about this in a minute, is the financing for that. How do we get finance into creating those secure supply chains at the upstream in terms of where's the mineral going to come from? It's one thing to build a battery plant, but it's no good if you haven't got any supply. If the supply has to come from either from China or from a country where the Chinese kind of have all of the good deposits there.
So with this kind of increased focus on kind of regional supply chains, do you find local governments are pushing for more exploration and stuff in places that were previously unexplored?
Not really. I have to say, I don't think governments are really very focused on exploration, because it's not something that's many countries actually understand. It's a new thing. I mean, Canada's very, very good at this. Australia's very good at this. But I think a lot of other countries need to kind of look at what's going on or has gone on in Canada and Australia and say, how can we copy this? How can we bring this over? For example, in Canada, you have the flow-through funding a scheme which allows them to raise more money at lower prices by taking advantage of certain tax breaks that they have. That system could be applied in other countries, for example, in particular in Europe, where there's a lot of high taxation, and there's a lot of highly prospective geology, and I think that would be a very good formula for stimulating homegrown supply of some of these metals and minerals.
I would agree with you, Patrick. What we find when talking to governments, specifically in Scandinavia, is that yes, we need to green the supply chain, yes, we need to develop more mineral resources, but when it comes to how do you then stimulate that in a country, people are really not tuned into that question. I think it's partly to do with as you say, a long history of under-exploration in those countries, or no focus on it.
Yeah.
I think, on the other hand, it's also due to the short-termism of politics, because exploration, of course, only pays back in 15, 20 years from now, right? So it doesn't earn you votes today, actually probably the opposite.
Right.
But there are, I think, lessons that can be learned from how some of how the UK and Norway, for example, have handled their own offshore oil and gas industry, and apply some of those models to to exploration investment in Europe. And I think there's a couple of different models that you could apply there to attract more investment.
Yeah, I think governments see it as problematic until a project gets close to cash flow, and then they start working out what they can spend the money on. And suddenly they're allocating cash to new bridges and new social projects and things that the local politicians can take credit for. So, yeah, we're a bit cynical about the way governments approach our sector. I mean, if you take Sweden, actually they seem to be very pro-mining until you get to a certain point. In fact, the Minister of Mines there is a sea change there. But on the one hand, every project has to deal with Greta Thunberg and her crowd. I think they'll get there in the end.
Well, I mean, the overriding thing is we're talking about critical metals, which will be essential for the energy transition. If fossil fuels are the problem, then you have to have more metals. And so I think even those politicians on that side of things that have always not wanted oil and gas and coal, they have to become more realistic about the need for developing new metal mines, basically.
So how do you grow that focus for governments and investors to start kind of focusing on kind of exploration projects?
Well, I think lobbying governments would be actually quite productive. I think there's a lot of other industries have heavy lobby groups. I don't think the mining industry really has a strong lobby group anywhere in the world, except maybe in some of the less developed countries and Australia. But you know, in Europe, in the States even. I mean, you talked about the States. The oil industry is very, very strong lobby in the States, as we all know. You know, for oil drilling, for exploration in oil in the States, you get a full write-off as an investor in that project. So as a retail investor, you get a full write-off in the year that you spend the money. But that's a huge advantage that the oil industry has over the metals industry. And why would it be different, especially now that it's recognized that you know more copper mines are going to be needed and probably less oil and gas and coal, but you know.
So we are seeing certainly more interest from Western governments.
Yeah.
I had a call from the US State Department the other day. I then met some of their guys on a field trip in Malawi. You know, these guys are now out and about, suddenly asking questions about what's going on and looking like they're encouraging it. I haven't seen the colour of the money yet, but there's definitely the UK and European governments are headed in that direction. For example, the French have set up a new critical metals fund. Mm-hmm. It's a bit slow getting going, but it is coming. It's a bit like everything the EU does. It's a little bit on the slow side. But so long as it does come, it's important. I think, you know, we're lucky in some respects that the Chinese have only focused really on metallurgy and buying projects. Can you imagine if the Chinese had really focused on training up 1 million geologists, as Joe Stalin did, and sent them around the world? They'd be making discoveries all over the place, because I'm sure they would be reasonably funded. And thankfully for the guys in this room and in this conference hall, they are running around with big checkbooks, buying up things that are being discovered. The only thing from a Western perspective is it's not really good if it's all controlled by China.
Mm-hmm.
I think you touched on a really important point, and the investment in exploration by Western mining companies has been decreasing over the past 15 years. And I think that's another trend that needs to change. You talk about how are you going to get momentum. It's not just influencing governments. It's also looking at the BHPs, Rio Tintos of this world, and looking at, okay, so where are we putting our money? How are we managing our investments, and can we increase that? Because if you simply look at some data from the industry, in the 2000s we were spending something like 5% of our net cash flow on exploration. Nowadays it's less than 1% across the industry. So there is a genuine decrease in the amount of investment in this. And that needs to be turned around if we want to be able to supply the amounts of copper and nickel that we're going to need going forward. Mm-hmm.
And there's an irony there, because companies like Rio Tinto and BHP are making cash flows that they couldn't have dreamt of 20 years ago, particularly driven by iron ore, where in some bizarre way they seem to, somebody controls the market there, because it's the price is almost 10 times as much as your cost of production. You don't see that in a lot of industries. So it would be quite nice of the boards of the major companies to push a bit more cash out there. But you know, frankly, the junior exploration industry wasn't so badly funded for a long time. It's only over the last year or so that it's really dropped off. And there is money around this. It's generally family office money. It's money from people who kind of know what they're doing. But we are starting to see green shoots of other cash flowing in.
Yeah, one of the points, Jan-Henk, there's a great point that you made about the percentage of revenue that's been spent on exploration now versus how it was previously. And also, I think it's worth pointing out how it compares with the companies that the market itself really likes. So, in tech companies spend a huge portion more on average of their revenue on R&D. And exploration is your R&D basically in the mining industry. And so, I think there's an argument that I don't necessarily think that the lack of expenditure comes from the BHP board necessarily, or the board of the company. But I think it's more that there are some investors out there who are always there to say, no, give me my money back, don't spend any money on exploration, because also, remember, they don't want any new discoveries as well. I mean, those investors want to see high prices, and that comes from a lack of supply in rising, of course, rising worldwide demand. So I think probably the investors need more pressure from if they want to be part of the green transition, then investors need to basically ask their companies to spend more on exploration, find more supply, and solve the equation in terms of what's missing there, which is all of these metals that I think we've all agreed are going to be in short supply over the next 10 years or so.
Yeah.
So we have a question from the audience.
I just thought I'd throw in a couple of questions. One for Jan-Henk. I mean, maybe you can say why BHP is so determined not to have anything in South Africa. I mean, it would be interesting to get BHP analysis.
I'm afraid I cannot comment.
Okay, so that's question's not been answered. And then just general questions. Does the panel agree with Stanley Druckenmiller, who, in my experience, has been right on just about everything, that copper is the place to be right now? A few sort of backup comments would be helpful. And on gold, it seems to me, Patrick, you were saying how gold, is partly been driven by the fact that real rates are not really that high, and that's probably right. But isn't geopolitics a lot to do with it? And China just building up its gold reserves to, be stronger than the United States? And how do we analyse how that's going to pan out?
I'll take that question on gold then first. Basically, you're right that a lot of the new demand is coming out of China and the central bank and central banks elsewhere in the world as well. I think geopolitics is driving that in terms of what we've seen in terms of the risk of having your money in dollars and dollar-based instruments as a sovereign nation. So there is a move to try and use gold more as a monetary instrument, and I think that's going to be a trend that's going to continue, particularly when you look at the trade between the Middle East and China in oil. I think gold's going to become more of a part of that trade. I can't exactly say how it will, what the mechanics of that are, but I think that it's going to be important to basically take money out of dollar accounts, and as we've seen with the US and Russia, there's been a huge problem for Russia having their reserves in dollars.
If gold has been dominated by the central banks, do you think silver is actually the metal that Western punters will get active in?
I think silver's always going to be more leveraged than gold to changes in the prices, but I think gold is still, for me, I mean, gold is still going to be a very attractive asset to have for punters, for the retail, as well as obviously central banks. But silver, yeah, you're right. Silver, can have its day as being a much more leveraged metal to those changes in the gold price. In fact,
and you've got industrial demand growing as well on silver.
Correct, yeah, with solar panels and the likes. Yeah.
It's my personal view that gold and silver are default metals. And when I say that, I mean, when people can't decide what else to put their money into, they're not sure the dollar's going to be good anymore if the Fed starts cutting rates. If you're a Chinese citizen and you clearly need to invest and save for your healthcare, for your retirement, where do you put your money? You're not allowed to buy Chinese property anymore because President Xi has said that property is for living in and not investing in. Quite like our government to say that, actually. But also that they've had so many scandals with investment groups and other organizations within China. In fact, the Chinese government issued $140 billion of sovereign bonds. I think it was last night. It's what they call a special sovereign bond issue, the fourth that they've done in 25 years. So they don't do those sorts of things very often, but they do. I mean, $140 billion of new cash into the economy to prop up failing industries is pretty good. And actually, I mean, their expansion into electric vehicles is so huge.
Enormous.
If there's any interruption in that expansion, you've got to ask who's going to pay for all that. So I guess the Chinese government's going to be there. Now, if they carry on issuing these special bond issues, then they'll have to drop the currency, because as it stands, I reckon they're pretty close to being accused by the US of being currency manipulators. All central banks manipulate their currencies, frankly. It's just a question of how much do they do it and how much of a problem for the rest of the world is it. The good thing is China, although China's not selling any electric vehicles, we're not selling anything much into the US, it is managing to sell everything elsewhere in the world. So it is a juggernaut that is not easy to stop. I think in the meantime, Western governments have been caught a bit short because they simply haven't done the planning that's necessary. They don't have the electrical power, they don't have the grid capacity, they don't have the charging points, et cetera, to take all these Chinese vehicles. So there's going to be a bit of a catch-up, and the comment to make at the end of this is it all needs copper.
I was just going to say that this is exactly what it does. You've just highlighted the case for the expanding copper growth. I mean, we forecast that by the 2030s we're going to need 4 times as much copper produced on an annual basis as we have today. That's a massive task.
Where do you see minimum grades going to? I mean, for a new mine, what's a good minimum grade in that environment?
That's a great question, and a really difficult one to answer.
Can I refer you to YouTube, which is the oracle of many engineering things? There are videos on YouTube suggesting mining methods that would take you down to 0.3% copper in underground mines, and actually they've been around for a while. And when we first saw these sort of engineering theories, shall we say, proposed by people like Codelco in Chile, we thought, really, is that possible? Now it's looking much more likely, much more achievable, actually. I mean, yes, it requires big amounts of capex, but I did see a mine in the Philippines some years ago that was mining down to 0.3% copper, but there was no explosives. It was a fairly easy mining process.
An open pit. I mean, open pit, the grade could be 0.2 or something. I don't know.
It could now, but for underground, I'm thinking of underground mining. Codelco, I think, reckon they can go down to 0.3 if you've got a large block cave of some sort.
Yeah, I think that's achievable. The flip side of that is that by expanding existing mines and going to ever lower grades, we're still basically precluding capital flowing into exploration to find new mines. Yeah, and that's some of the conundrum that we have in the industry at the moment.
Yeah, I would say that also as these mines get bigger and deeper and more complex, the risk of failure in those pits and in those underground workings seems to increase. And that's just a fact of engineering and nature, frankly. So it's certainly still a very good idea to get out there and try and find more conventional grades. I mean, ideally you want a pit that starts at 1%, but you're quite happy mining it down to 0.5. So that's what you're heading for, and I'm sure there's lots of scope to find more of these.
I'd agree.
I think that's one of the points, isn't it? Is that there's not enough money going into exploration to find new high quality, resources in copper and other metals. Meantime, there's a lot of money that's going into expansions into lower quality ore, and more risky, sometimes in very risky countries. And it's the real special ones are the things that are found through exploration from scratch. I think that Kamoa, for example, would be an excellent example of a pure exploration discovery that's turned into one of the world's leading mines within a fairly short space of time, I'd say. Yeah.
So, I mean, just to continue on that, what are, when you're evaluating these types of projects, what are you looking for, and how do you kind of evaluate based on, whether it's grade or everything else that you guys have been talking about?
I mean, from our side, we're an alternative investment manager, so we focus on later stage opportunities that are shovel ready. So we take things from the point that the feasibility studies have done all the way into production, or producing assets that are underperforming because the the time for your investment period has to match with our investment horizon. So we are patient capital, we're with 10-year funds, but you have to, realize some of those investments within a 4 to 5 year period. So we're commodity agnostic, but we follow the trends. I mean, we definitely like copper and some of the other energy transition materials. We've done investments in over 50 countries, so we do manage geopolitical risks accordingly. And quality management teams are also important. So we'd like to partner with good operators, good management teams in realizing those things.
Yeah, for us, we're obviously earlier in the value chain with our investments. So it starts with good geology, right? So the fundamentals need to be there, mineral systems, components need to be in place, and then it's the same with what you said: good management, good teams, good track records, operationally, safety, ESG. Those are really the attributes we're looking for, but it has to start with good, solid geological foundations.
Yeah.
It's a golden rule, always invest in good management. But when you're looking at exploration companies, the management that you start with shouldn't be the management that you end with. Correct. Because the geologist, sometimes you get a guy who's a geologist who can take it all the way through, but normally they need to be sensible enough to hand over to people who are more expert at the feasibility study stage, at the financing stage, at the construction stage. So finding somebody who is actually going to manage that process in the right way is good. And of course, trust and honesty are all important in this. And in fact, when I look around the sector, 99% of the management teams are great. But they need a bit of guidance. And actually that's where hopefully the involvement of BHP, Rio Tinto, Anglos and others can be very helpful.
Yeah, and just to build on that point, we do that through our new Explore program, where we actually do support the management teams in developing their understanding, not just of the technical, but also of the actual development of their leadership capabilities, their management aspects, and how to take a project forward and find investors. So yeah.
And layering on top of that as an additional comment, I'd say jurisdiction and infrastructure. So a lot of big mining projects, the reason why they cost so much is that they're in the middle of nowhere in the high Andes or wherever, and they just can't work. So infrastructure is very, very important.
And so earlier, the panel was talking quite a bit about, the critical metals for the energy transition. So just wanted to kind of see how much this, greater thematic is really influencing investment decisions as you move forward.
Look, I mean, from our side, it's definitely a tailwind from a demand perspective. So we have our own views on supply demand, and there's definitely tailwinds on the demand side for many commodities, but particularly those that are involved in energy transition. And by the way, that includes for us, high-grade iron ore. You can't decarbonize the steel industry without high-grade iron ore. And that is becoming rarer. Yes, iron ore is a big industry, but high-quality DRI is even rarer. We look at, copper, and then we look at some of the niche commodities as well. Rare earth, silicon, nickel's tough one, with Indonesia from an investment standpoint, and you've seen that over the last year or so. But I think each commodity has their own specific supply-demand issues that we need to look for. But overall, the tailwind in the sector probably hasn't been as good for, I would say 20 years since, China industrialization, which is a real positive.
I would add to that. I think when I consider the 30-something years I've been in this industry, we've never had such good tailwinds. We've never had an electric vehicle revolution like this that is creating so much additional demand. It just so happens that right now it coincides with a dip in risk capital that's available.
Do we have any questions from the audience before we start to wrap it up? We've got another.
Coming back on the iron ore thing, how much do you think iron ore demand is being boosted by wind turbines and things like that? Have you broken out, I'm looking at Sunny really because you were talking about iron ore, I mean, have you broken out how much of the demand is due to this energy transition?
Well, I don't think we've broken it out specifically for, by, wind turbines as such, but you need steel, not just in wind turbines, but you need it for solar panels, you need it for broader infrastructure. So I think overall steel demand will continue to follow GDP growth. So I don't think you get, a huge boost as such from energy transition as you do for other commodities. Having said that, I do think when you look at the world we're about to go into, we're going to go into an infrastructure-led economy globally. There are not just in places like India, Africa, which need increased urbanization. I think the West are going to go through a reinvestment on their infrastructure spending. So I think that broader thematic will drive demand overall.
You can feel that coming. I mean, look, America needs a new bridge all of a sudden. In fact, it's not the only one. And there was some stuff on the news, the UK news, last night, talking about another new bridge that is required. In fact, there are several. So yes, you can see, I think the news flow is heading in that direction. And certainly as a way of re-stimulating economic growth. Although there is reasonable economic growth in the UK, but you can just see it's helpful to push things along, to spend a bit more money in that direction.
Yeah, and I think if you look at countries where there's a high uptake of electric vehicles at the moment, you start to see congestion on the electricity system, which is going to need a major overhaul if you truly want to move to a 100% decarbonized transport system.
Thank you. I've got a question for you following up on that very point. So as we move to the green energy and we need for clean energy, let's talk about solar and wind and nuclear. Where do you see that going, and where do you see the big driving for the metals needed for that?
I can only see it grow going forward. I would add hydro to that list. I think there will be an additional growth in hydro electrical demand. I think nuclear will be sort of the stabilizer of the grid in the future, to basically look at the fluctuations that you get from solar and wind. But it has to grow if you want to decarbonize the system.
All right, we have time for one more question from the audience, if there are any, before we start to wrap it up. All good? All right, so my last question for the panelists is really just kind of some forward-looking thoughts for the industry, for investment, some, I don't want to say predictions, but, where should we be focusing? What are some kind of key points that you want the audience to take away from this panel?
Well, I'd just really share what I'm doing myself with my own cash, because I am investing in early stage exploration companies, and they seem to be going okay actually. I mean, we're talking about very low valuations in these markets. I put some money into Kavango the other day. It's actually doubled since I did that. It's quite remarkable. And I think they'll make a discovery in Botswana. They're working very hard towards that. And they've actually picked up some assets in Zimbabwe. And I think I'll just make a point that, some countries look like they should be blacklisted, but actually, there are people who go in and make things work in these places, and that's not just good for their own companies, but it's good for the people in the communities that they serve and where they work, and so that's very important.
I'm going to take it a little bit in a different direction. If I look forward, we've talked about the increased demand coming our way on copper. I think when you look at the overall way in which exploration has been approached over the past decades, there hasn't really been a step change. But I think with the new technologies that are emerging, both in terms of sensors as well as artificial intelligence, and a combination of those two, we're going to see some breakthroughs in our ability to actually pinpoint where those new discoveries are going to be. And I think that is really going to drive, where some of the investment is going to go, but also where we're going to find the next big resources.
Sounds great.
Yeah, and I would add to that. I mean, maybe not so much a prediction of the future, but the sector has been so underinvested for many years, and so when you do see green shoots of demand, and look, I think it's going to take slower. Candidly, I think the energy transition is going to take a long time, because you just can't You can't produce 10 million extra tons of copper by the end of 2030. You just can't. I mean, so I think you need to be patient, and I think technology is going to increase and drive efficiencies going forward in the sector, which will benefit. And we haven't seen much by way of technology yet in the sector. Other industries have. I think we're behind in mining on that side.
I agree. I think there's going to be definitely some good technology-driven gains in the industry as we go forward. One of the things I always say about project that we're invested in is in the future. It's in a country where people get paid more than they do, say, in the most African countries. But in the future, we probably won't have any truck drivers or loader operators when we get to mine it in 7 to 10 years' time, maybe. So there's going to be technology coming into the industry that helps lower costs. In the medium term, in the short to medium term, though, I do have to say I think the outlook for gold is very good. I think that we've already seen a little bit of it, and obviously coming from the Chinese demand, central bank demand supporting that, but also the overall investor in the West, in the US in particular, is going to become much more interested in gold as the Fed cuts rates inevitably at some point. It's being delayed at the moment, that decision making, but I don't think they can hold it off for much longer.
Can I make one point on
Yeah.
AI? There is a company that's majoring on AI and it has a discovery it's working on in Zambia, and that's great. But I noticed they're also talking about AI and HI, and the AI only works if you have human intelligence backing it up.
This is very true. This is
Absolutely.
extremely true.
I think that's
agree more.
that's a good point to end on, and take forward to your meetings for the rest of the day. But I want to thank our panelists for joining me here early in the morning. So thank you.